Is Apple losing its moat? Well, let's find out. Apple's a well-known technology company that markets and sells all smart devices ranging from phones, laptops, watches, tablets, and wearables, and so on. They also have advertising through third-party licensing agreements along with their own advertising platform. Apple makes its money through 5 segments: iPhone, which is around 50% of revenue, services such as the App Store, Apple Music, iCloud, Apple Pay, and Apple TV. This accounts for around 26% of revenue and is Apple's current fastest growing segment. Variables like their home and accessory segment include popular products like Apple Watch, AirPods, HomePod, and Beats products. This is about 8.6% of revenue. Mac covers the company's personal computer line, including the MacBook Air, MacBook Pro, and iMac. Mac segment accounted for around 8.1% of revenue. And finally, iPad includes all tablet models such as the iPad Pro, iPad Air, and iPad Mini. iPad, their smallest segment, brought around 6.7% of revenue. Let's talk a bit more about the stock price and a bit about the valuation before going into financials. Apple is currently trading at around $248 with a P/E ratio currently of 31 and a price to free cash flow being around 29 to 30. Apple over the last year is up 16%, but year to date the stock is down 8%. So what's going on? Seems the decline over the year could be from the recent rollout of AI not being up to competitors' levels. Along with that, Apple faced regulatory issues with courts. Also, costs for the phone have increased, compressing margins slightly. Softer demand in places like China have also knocked the stock down slightly. Finally, just the overall market rotation has hit big tech, which is what Apple's a part of. Now let's look into Apple's financials. Here are some key highlights from their Q1 earnings. Revenue was up 16% year over year to $143 billion. iPhone also had its best ever quarter according to Tim Cook, their CEO. The company's service segment grew 14% year over year, while earnings per share or EPS was up a record 19%, allowing Apple to generate $54 billion in free cash flow and being able to return about $32 billion to shareholders, mostly through share buybacks. Here's a chart of their operating profit and net income. As you can clearly see, it's up and to the right. Along with this, like I said, Apple has been aggressively buying back shares, like shown here, going from about 21.3 billion shares outstanding to 14.6 billion shares outstanding in only 10 years. That's 41% CAGR. As I said earlier, Apple is extremely profitable and makes tons and tons of cash with their cash flow, being around 123 billion as of today, like shown here. Overall, Apple has always had an amazing balance sheet. Also generate more cash than debt, which is always positive. Now, Apple has many plans in the future that include product innovation and excellence, like integrated ecosystems of products and heavily investing spatial computing via the Vision Pro and Apple Intelligence. They also want to release their iPhone over a 3-year plan instead of yearly releases. Apple is also planning to reduce reliance on China by expanding production into India and Vietnam, along with pushing service growth, which is a higher margin business. Let's now look into Apple's valuation. Apple's trading at a P/E of 31 and a forward P/E of 29, which is slightly above average in the sector, along with above average and is also above average compared to the S&P 500. Their price to free cash flow is around 26, with their forward price to free cash flow being 24, which is also above average. But Apple do make up for this through their high margins and earning growth, along with very high cash generation. Now, Apple does pay a small dividend, which they are growing at around an average rate. This is obviously because Apple prefers share buybacks over dividends. This has made their EPS grow above industry average. In my opinion, Apple stock is trading at a high premium compared to industry and overall market average. The company has a nice ecosystem of products, which they hope to strengthen, along with their heavy investment into AI that Apple hope will improve Siri and their AI projects. Now, do I think the stock is worth buying right now? No, I think right now there's too many risks with Apple, including like a crash or another failure or bad rollout could hurt the brand. Will people start getting annoyed at the prices of Apple products? I don't think so, especially from the last earning report. It seems like the sales couldn't be better. For me personally, I'm not going to put my money into Apple like I said. I think right now it's better to put the money into a fund or store it into a high yield account or even the bank. But remember, like I always say, this is not financial advice. Please do your own due diligence. And thank you so much for watching, and I'll see you in the next one. Slán.